Yo, what's good there, guys? What's good? What's good? What's good? What's good, guys? I'm in the building. I'm in the building. I'm in the building. I'm in the building. Let me just set myself up there. Sorry for being a bit late there, guys, but we're gonna start at 11 o'clock. I was just trying to sort out everything, sort out everything, sort out everything, sort out everything. Okay, just plug my PC. Being in a rush, guys. Being in a rush. Being in a rush. Oh, what's going on with my camera now? My camera's dark. I don't know what's going on, guys. The camera's dark. The camera's dark. But anyway, let me just go and fetch my mouse. I just need a mouse, and then yeah, let's get to cracking. Let me just go and get my mouse.
Yeah.
Okay. I'm back, guys. I'm back. Okay. So this is plugged. Let's just also connect my headsets there. Okay, let's get to cracking, guys. Let's get to cracking. Let me share some screen. Okay. Okay. Let's do the things to be done with the screen. Okay. Don't know what's going on with my trading view. Let me just open a new trading view. So I haven't looked at any of the pairs. I haven't looked at any of my pairs, not even one pair since yesterday. So it's kind of just gonna be, yeah, me kind of just going through things like from scratch, literally from scratch. Yeah, let's just do this. Make sure my phone is okay. There we go. Hot. Yeah. Come on now. I think it's a network. But yeah. Anyway, so I haven't really caught up with my analysis for the week or whatever the case is. Yes, I did do ASR last night. But I didn't look at any of my charts. I kind of just mentally went over what my trading week was like. Yeah, and I guess this week is just one of those weeks. I know I'm in on Susie, and I got another nice sniper entry. Well, oh crap. Guys, I'm sorry for telling you guys to close out on this position. Momentum ended up hitting TP anyway. But yeah, I think it's okay. We were hoping for a trade that just moves in the direction. We weren't looking to sit in the trade for as long as we did. I mean, like the first time we entered somewhere here, we ended up closing out. Price came and would have taken us out of the position. The second time we had a sell stop there. Price came, triggered us into the trade, went almost against us, came back into profit, went against us, came back into profit, and was correcting the whole time until I think we closed out somewhere here at around break even or something like that. We closed this trade out at break even. Yeah, these tis what it is, I guess. Tis what it is. I do apologize, but I had a limit order set somewhere up here. and price did come and trigger me in on the limit order, but wasn't with a lot of size. I think from that position, I've closed most of that position. I think I just left like 0.01. Because obviously I was running close to TP. Yeah, so I just left. I think I left about 0.01. Yeah, I left about 0.01 running of this trade. So Susien, I guess the direction, and I guess it's kind of, it's a lot of pressure to send signals, guys. It's a lot of pressure to send signals, because I guess when I'm managing a trade, I'm pretty much thinking about you guys as well, because I know sometimes there's a lot of people that don't practice risk management. That's why I try and find a lot of those trades where we just enter and we go straight. We enter just before momentum. That's kind of what I try and do. But when a trade chops us up like this and keeps us in the position for so long, even till the next day, and this was meant to be a day trade, it wasn't meant to go over to the next day. So that's kind of why we managed a bit aggressively. But yeah, I guess we live and we learn. We live and we learn. We're always doing things to I guess just become a little bit slightly better. So coming into, let's just delete. What I want to do is I just want to delete all of the analysis on all of the pairs, just so that we're all good. And this is kind of what I would like maybe everyone to do. Like just delete your analysis like every week. Don't go into the next week with the same analysis. Like if you did see the same structures, and if the same structures are there, you'll still see them. If price action has changed, let your eyes be able to adjust and accommodate. And yeah. So we don't when we're deleting our stuff, we don't even want to see what we did last week. We don't even care what we did last week. Like if we see the same structure, then okay. But if we don't see the same structure, then all and well be it. We're just accommodating for how price action has developed since the last time we saw it. So I'm just removing all the drawings quickly so that when we go through the pairs, we're okay. I think I can hear someone talking. Uncle Jay, yo, Uncle Jay, what's up?
What's going on, Jay?
Yo, it's been a while, man. I'm okay,
buddy?
man. I'm fresh. Let me even just pause this music, dude. I'm listening to a little bit of jazz here while we're doing the analysis. Let me pause it so that I can hear you properly, man. How have you been, man? How long has it been since we last spoke, dude? It's been a while and a half.
Long time, brother. I was away for a little bit, but trying to get back on this thing again now, brother.
Love it. And I was gonna ask you that, man. How's things been? Like, have you still been trading and stuff?
Yeah, I stopped for a bit, to be honest. I had some family stuff to sort out, but I've just been concentrating on my work, and I said, I've got a little bit more time now, so let me just try and dig this thing up and get my head around it properly. But I'll be hooking you up for some ones-to-ones. We're going to fire it up this year. You know how it is, man.
Definitely,
love
man.
Love to see what you're doing. I've been watching your YouTube thing. I'm loving it, man. Keep up the good work, brother.
Thanks, dude. Thanks a lot, man. Definitely, like a lot's changed since the last time we've spoken.
You guys are growing,
so we definitely need to catch up, man.
You guys are growing, man. It's international now. Love it.
Awesome. Thanks, Uncle Jay.
Keep up the good work, my brother. Keep up the good work.
Appreciate it, man. Appreciate it.
Definitely. It's a pleasure.
So I think let's see what we've got here on DXY. Let's see what we've got on DXY. Okay, so can I put my just so that I can get into my own flow here. Okay, cool. So we're on the DXY, guys. We're on the DXY. So looking at the structure, we'll just stick to the weekly, looking at the most recent price action over there. Yeah, it's tough. Very interesting thing, hey. So I was basically talking, having a conversation with Jabu, and we were basically talking about why would dollar be basically strengthening from this point onwards? Like, why are we seeing dollar strength? When dollar's really honestly not getting any stronger. There's so much that's happening with the dollar that there is no reason why dollar should be moving to the upside. Why is dollar moving to the upside? And we kind of just looking at things and observing all of the other currency pairs. we realize that, remember guys, everything is relative. Like when we're looking at the dollar, like the strength of the dollar is not just because of what's happening on the dollar. Remember that the dollar is always is always against some other pair. So ultimately, other pairs were a lot weaker than the dollar was, obviously making the dollar a lot stronger than the other pairs that were in the basket, or the other pairs that are relatively compared to the dollar index. So I don't know, makes a little bit of sense to me. Kind of goes against everything that I was expecting last week. That's why we didn't look for any trading opportunities on AU. But yeah, so good, so good, so good, so good. But otherwise, DXY, guys, if we look at things here, obviously you guys can see that we're still holding this uptrend very nicely, I guess, very nicely and strongly. If we just take into account our extreme lower structures there, we've still been bouncing off the support trend line there. And obviously we're looking at this corrective nature in price action down here. Okay, why are we even on the weekly? Let's just go down to the daily. We were basically looking at all of this corrective nature over here, considering that yes, prices maybe are in some sort of an uptrend. We did create new highs, we did create higher lows, we did create higher highs, but we can see that once we broke above this level of structure, there's a lot of sell biased momentum or sell side momentum that came into the market. And obviously after we saw all of that momentum to the downside, we observed that price action is taking a lot longer to move up than it was moving to the downside. So we were very much bearish bias, especially as long as price stayed below this resistance area. As long as we were below this resistance area, we were very much bearish on the DXY, looking for some dollar weakness. But otherwise, looking at how price action is developing now, and obviously just accommodating for the newer structure, what I'm going to be looking at is obviously this zone that I picked out from a weekly, considering that, okay, there was a consolidation that happened in this area here. So I know that a lot of orders are being put in this region over here. From all of these orders, remember that price is only going to be consolidating when market has found an area where both buyers and sellers are going to transact, because market likes these areas here. Market likes to give everyone the price that they want. When market impulses, there's more buyers involved than sellers. What is market doing? Yes, there is more buyers than sellers if market is moving to the upside, but what is the market doing? The market is running as fast as it can through all of this price region over here where there aren't any sellers. What is the market also looking for? The market is going up looking for an area where sellers will show interest, because the market wants to spend a lot of time here where both buyers and sellers are going to be transacting, and not a lot of time here where there's only one market participant being active at that point in time. So obviously we can see that from this consolidation, which side of the orders obviously won. Obviously we can see that there were more sellers involved inside of this consolidation than there were buyers, because price moved to the downside. So what I'm going to be looking for is, instead of us maybe looking for that bearish momentum of these resistance areas here, what I'm going to be doing is I'm going to be looking at these or levels of structure inside of here. So I'm going to just basically refine that weekly resistance area that we had there. I'm going to refine it to a daily, just so that we have an exact area where we find momentum coming into the market. So from a daily, two areas that we can see where momentum came into the market. First resistance area is up here, and then obviously last resistance area is up here. How do we know momentum came into the market from these resistance areas up there? We can clearly see bearish engulfing in this area here, obviously showing us that momentum shift to the downside. Why is this thing not selecting? Bearish engulfing over here, showing us that momentum shift to the downside. Bearish engulfing over here, showing us that momentum to the downside that was able to actually violate all of these lower structures over here. So we know that most of the sellers, or at least that last bit of sellers, came into from this resistance area over here. So this is going to be an area that we can look for that sell biased momentum. So let's just come back to the most recent price action. In terms of a resistance area, a resistance trend line, I kind of don't want to add a resistance trend line. Maybe we can, just to visualize if prices do break back within the structure, then maybe we can still trade the structure. But in terms of a resistance trend line, I kind of don't want to add one now, because I don't want to make any bearish decisions as yet. I don't want to let my eyes focus on a lot of bearish momentum inside of here, because it's pretty much very far from the points of interest that we have. If price was a lot closer to those points of interest, then yeah, maybe we could be expecting maybe some bearish momentum from somewhere inside of here. So since market is obviously in an impulsive phase, coming to maybe an area, maybe it's this resistance area here, maybe it's this resistance area here, but we can clearly see that market has been impulsive, whereas maybe we want to look for trades in the opposite direction. So because market has been impulsive to this area of resistance, what we're going to wait for is just for those reversal structures. So either if prices choose to move to the upside, or maybe we hit some type of a double top structure, or it doesn't really matter what, all we want to see is a reversal structure to confirm that these buyers that are currently looking to buy dollar strength have now exited the market, or at least there are sellers involved in the market, or at least if maybe we see an ascending structure, there is no, yes, the buyers are still there, but they're not in the market with the same momentum and intensity that they were in before. So what we want to see is just basically these buyers coming out of the market. And then once we see these buyers coming out of the market, then we can basically resume our sell bias. Our sell bias. So basically, if we don't find any reversals up top, we wait for price action to break back within the structure. Once we're back inside of this ascending structure, then we're basically just looking for that momentum to the downside. Any sell bias setup that allows us to get into the sell side momentum. So I'm still bearish on the DXY, guys. I just don't like this bullish move. And I guess I don't trade a lot of dollar. AU is the only pair that's, I guess, maybe heavily influenced by the dollar that I trade. So yeah, I can exercise a lot of patience on waiting for what I would like to see. Cool. Yeah, this thing. Okay, guys, we finally completed this structure. It's been from when? From last year. From literally last year, we've been stuck inside of the structure. We've been talking about the structure, finding, I don't know, whatever we've been finding inside of the structure. And finally, oh my God, from May last year, we were stuck inside of the structure. And we finally, March 2022, we've completed the structure. So nonetheless, I guess, yes, we were looking for some bearish, some sell bias momentum. Obviously, we were still looking at the structure and looking at where we were within the structure, and we were at this resistance area here, which it made no sense for us to look for buying opportunities at resistance. So we didn't end up really involving ourselves in anything nice on Aussie CAD, but nonetheless, we've completed the structure somewhere up here. We've broken above most of the major resistance areas that we've been looking for price to break above. But now, since obviously we've got this nice bullish bias momentum pushing to the upside, all we're waiting for is now we're focusing on the continuation of the structures that we're currently seeing. So maybe let's just draw in that higher time frame structure, this daily structure, just so that we can see what's been cooking over here. I think I'm gonna go and look for some of our old analysis, like from the time we were in this area here. From the time we were in this area, this zone here, this point of interest was somewhere that we were looking for prices to come back and complete. And we had equal highs here that we've been waiting for price action to come and violate and tap into this resistance area. So it'll kind of show you guys that even if price does leave a point of interest, we can come back next year to come and fulfill that point. Or well, at least if I'm looking at a point of interest like this, taking into account order flow and whatever the case is, yes, whoever bought from here that had the intention to sell the market has been in a negative the whole year, and finally they're going to come back and close those buys that they had added in that position. Or maybe if momentum is going to continue to be bullish, they just wanted to buy at lower prices, they're already in a couple of buys and they're maybe going to start closing buys at the top, or however these institutions or whoever makes decisions, they make they make decisions in a very weird way, guys, in a very weird way. Like, you might ask yourself, like, who in their right mind can buy intentionally, can buy 1 million lots in this area just for the purpose of selling it later to buy a lot lower? Let me tell you who can buy in this area and hold this drawdown for a year, maybe even 5 years. It's a hedge fund, someone that is trading both buy orders and sell orders. I don't know if you guys have ever go on YouTube and go and search what the terminal of a hedge fund looks like, the MT4. It just looks like lines of buys and sells on the whole damn chart. But obviously, a hedge fund is either naturally long or naturally short. So they know which direction they're going long term, obviously, because they make decisions based off long term. So they know which direction they're going long term. So you find out that maybe most of their volume is long or most of their volume is short, but they add positions in both directions, man. They're out there to chop. They're out there to chop us. But anyway, we've got some nice upside momentum, guys. We've got some nice upside momentum. We've also got a break above this previous resistance area over there. Some nice momentum, guys. We're still in the impulsive phase. You guys know I don't trade. I'm not looking to enter something like this. I don't jump on the train while it's moving. I wait for it to stop at the next station. So same thing here. Price is already in the momentum, meaning you should be in the trade already. What are we looking for? We're looking for that next corrective structure that obviously gives us an opportunity to get into this bullish momentum. So all I'm going to be doing here from this point onwards, I'm not even going to go down onto the 4 hour because obviously price action is still completely bullish. Even if we went down to the 4 hour, it would still look exactly the same, or at least, yeah, still look exactly the same. Maybe all we can do from a 4 hour is highlight maybe the lowest area where we're looking to add size. So obviously if price comes to this area here, this is the area where we'll be looking to add size for any bullish momentum or whatever the case is. But yeah, we're still just going to be, price is already moving. So we need to wait for the corrective structure that pulls into previous resistance, obviously treating it as support, and then we find our trading opportunities off that. So that's kind of how I would kind of align myself now on Aussie CAD. So I'll be bullish over the course of next week. Let's just do that. Cool. Let's go on to some AD Swiss franc. Let me just check the chats there and just make sure that you guys are all good, that there's no questions. Maybe the sound is gone and I'm just talking. Okay, cool. No questions in the chats, no questions in the chats. Okay, cool. Let's also delete this alert. Cool. So from a daily perspective, guys, we were looking to sell Aussie Swiss franc last week. Over the course of last week, we were looking to sell Aussie Swiss franc, basically observing some momentum to the downside, this corrective structure here. And we had this as our point of interest over there, which we were looking to add or find our reversal structures inside of that area over there. Yeah, momentum was clearly bullish, so we didn't take any shorts on Aussie Swiss franc over the course of last week, just obviously waiting. That's kind of why we wait. We pick a direction from our higher time frame, like in this case, we're using a daily. Once we pick a direction, we pick areas where we can find those trades, points of interest, where we'll be looking to enter those trades. Once we find those areas, we wait for price action to come into this area and then to give us entry criteria, which for me is a chart pattern. I look for a chart pattern inside of this area. Once I have a chart pattern, the chart pattern will tell me, okay, Uncle T.Mayne, don't just take any bullish engulfing that you find in this area. Look for your bullish engulfing here. If you don't find your your bearish engulfing, since you're looking to sell, then look for your bearish engulfing here. So that's kind of our process. And if we don't find all of this, then we know that we shouldn't be taking an entry, even if no matter what, because guys, ultimately this market that we're looking at, red candlesticks, green candlesticks, this crap doesn't really exist. What you're actually trading, you're trading your own mind. I don't know how to put that in a way that I haven't put it before, but this is kind of, you're not, this objective market doesn't exist. You're trading your own biases, you're trading your own understandings, you're trading your own point of view. That's kind of mainly what you're trading, because anyone can look at this chart and both find a reason to buy and both find a reason to sell. What matters is that you've got a process that you follow that guarantees that when you do make a decision to buy or to sell, that decision is backed up by probabilities. Obviously, there's probability behind it based off your point of view and your understanding on the market, and also that your system gives you some statistical results that you can obviously rely on and predict over a large sample size. And that's what everyone else is doing. Yes, there's someone that made a crap ton of money using Bollinger Bands, which I've never ever used even once in my life. But there's some millionaire somewhere in the world that uses that tool. It's just because they have a process that they're able to use that tool efficiently. So same thing with us. It's not like we're trying to do technical analysis to be right 100%. No, that's not the point. We're trying to do technical analysis to be able to refine our information and to be able to make a decision that's going to produce us money. we're not trying to be right. And I remember I said this in yesterday's session, that part of my own growth, I realized that there was a point in my trading career that I was trying to use technical analysis to always be right. I was trying to use technical analysis to never take an L. I even went to the point of trying to learn, oh my God, I want to take a sniper entry. And the whole point of that was me trying to use technical analysis so I don't take any risk. And that is impossible. What really helps, or where you need to be shifting your mind to, is away from you stopping to try and take a risk, but towards you trying to take a well-managed risk. And obviously, by managed risk, it also needs to be a risk that you've thought about, a risk obviously that gives you like our checklist criteria that we set: our direction, our point of interest, our chart pattern in the area, followed by our candlestick confirmation wherever the chart pattern allows us to look for that candlestick confirmation. Us doing that, making sure that yes, I want to trade this environment. Yes, this is the area that I want to trade. And yes, this structure will then give me and ensure for me that nature's theory is showing me that the people that I'm expecting, which is maybe sellers in this case, are going to be active or are trying to be active in this area here. And maybe that last candlestick confirmation that allows me, that says, yeah, press sell now. That's like my last piece of confirmation saying, yes, there's momentum to the downside. This is your time, or this is what. It's that process that's important, and not so much what's the outcome of each individual trade, or what's the outcome of each individual analysis, or whatever the case is. Long term is what makes us, guys. Long term is what makes us. But nonetheless, let's just get into some Aussie Swiss franc and see what we've got cooking here. So guys, on Aussie Swiss franc, what we can see is basically, if we just look at, let's maybe just go up to the weekly just so that we can clearly identify this resistance area up inside of there. So we've got some resistance. It's kind of, I would call it equal highs, almost equal highs, because there is on a daily some resistance inside of this area here that rejected from this area over here. But basically what I want to do is I want to look at this area for any upside continuation. I thought I grabbed this tool. I would like to be looking at this area for any upside continuation. But in terms of where we are within the structure, if we just observed this overall structure and we added some resistance in here, I can clearly see like it makes no sense for me to be a buyer right now where price action is. It makes no sense for me to want to be a buyer, because right now we're at an area where sellers could find interest. If we look at where price action is, we're somewhere in and around an area, some sort of a resistance. Yes, it's dynamic resistance, it's a resistance trend line, but nonetheless, it's still resistance. So what I'm going to be doing is I'm going to be paying attention to how price action is going to be treating this resistance area. I'm going to still look for my sell biased trading opportunities. So on Aussie Swiss franc, I'm going to kind of be, let's just say I'm more, okay, sell biased. I'm not going to be neutral. I'm not going to say I'm neutral or I'm not looking for anything. I'm looking for my sells. But I do know where the upside continuation might come through. Upside continuation, obviously, we can look for upside continuation at the retest of this nice weekly resistance area up there for any moves to the upside. Obviously, just maybe following through on whatever this higher time frame structure is here of this impulse, maybe corrector structure, maybe next impulse of move to the upside. Yes, we also want to be paying attention to something like that. But then just looking at where price action is right now we're at resistance. And I guess I'm just going to trade the structure that's there to me, that's there on my charts. And looking at where I am now, I don't think I'll ever have a situation where I buy into a resistance. Because in addition, besides me just saying, I'm not going to buy at resistance, let's think about risk to reward ratio. How much opportunity do I have from this, where price is right now, to where price could react? How much opportunity do I have from where price is right now to where price could react? I can clearly see downside will give me a lot more risk to reward ratio. So I'll kind of just maybe try and be more sell biased than bullish bias at this point in time. But I do know that if prices do come down, especially if they come down correctively to these resistance areas, those are areas where we can look for that upside continuation. So just dropping down onto the 4 hour, let's see if we can refine any resistance or observe any structures that can confirm our little bit of confusion over there. Just want to see if there's any area inside of here that we can pay attention to. I wouldn't look at this area here. The only area that I would have observed is this resistance area there. And we've obviously broken above that resistance area now. So I guess all we have to do is just be reactive to the structures that develop inside of here. Obviously, we know where our resistance area is. So we're paying attention to how is price coming to this resistance area. And then obviously, if price comes here impulsively, then we wait for a reversal structure. If price comes here in a corrective manner, then we can allow ourselves to look for a potential risk entry for that move to the downside. So depending on how price gets there, that will determine the type of entry that we're going to be looking at. And then obviously, if price comes here impulsively, then we look at what is price doing at this resistance area. Are we getting some sort of a reversal corrective structure, or are we creating a continuation corrective structure? Because you guys know that something like this that once looked like a reversal structure can end up developing further and then turn into a continuation structure to the upside. So we pay attention to basically how prices get to a level of structure, what prices do at a level of structure. And those two pieces of information allow us to make a decision on whether or not we jump into the market or we sit out. So this resistance area, guys, I will be looking for any sell biased trading opportunities from here. And then obviously from here, if price action does get to this resistance, this is kind of where I would like to be a buyer. So yeah, let's go into some AJ, see what AJ has there. Let's also delete this alert. Okay, so on AJ, guys, AJ, I'm still going to be trading this kind of most recent price action over here that we have here, because AJ, higher time frame, we're just moving sideways. So anytime we're moving sideways, I remember that I want my process to be as simple as possible. I want to limit the amount of information that I'm taking. Like if I can obviously see that by taking in too much information is hurting my ability to make a simple decision, because it's really a simple decision, whether I'm going to buy, whether I'm going to sell, or whether I'm not going to do anything. If taking in too much information is hurting my ability to do that, then I take in slightly less information. So what I'm going to do is just focus on the most recent price action, just observing some momentum to the downside, an extreme high and an extreme low. Cool. For me to prove myself and fight my case on why I'm looking at this most recent price action, why is the momentum to the downside? I can see price action took 32 days to make this move to the downside. Now I'm going to look at how long price has taken to move up. So far, we had 91 days. We're taking 3 times as long to move up than we've moved down. So clearly, momentum is to the downside, and I'm just going to trade in the direction of this most recent momentum that I'm seeing over here. Observing my nice momentum to the downside, let me just have a look at what this impulsive move looks like from a weekly. Okay, cool. Doesn't look too interesting. So obviously, what I'm just going to do is just take into account whatever resistance I've got here, just looking at whichever areas I've got there, just joining in my resistance, and then obviously, we'll take into account whatever extreme support we've got there. Observe our corrective structure, obviously just looking for impulse correction and obviously impulsive move to the downside. Also just maybe take into account this resistance area just so that we know where we are relative to day structure. And this was the point of interest. I don't know if you guys saw, I did have an alert over here, but obviously I didn't want to enter this market on Friday or yesterday. But I did end up setting some alert inside of this zone here, because this was a point of interest where I am looking for reversal structures to form inside of here. But yeah, price action did kind of violate. We didn't violate the high, but we did violate this zone inside of here. So that's kind of why I stopped looking at it to add size or whatever, because price action is just not giving me what I would like to see. Nonetheless, we've got the same kind of a bias. Maybe you could even use this resistance area up there, because you guys can see that there's a nice bullish bearish engulfing from this area. And then kind of from here, we see price action taking a while before we see the momentum actually kicking in. So maybe let's just use that area where we see momentum coming into the market. And then obviously we'll consider maybe price action to be breaking or violating this resistance area. Maybe, yes, it makes our structure look a little bit awkward, but I would rather use a resistance where I see momentum coming in rather than maybe somewhere inside of there, just because it makes me feel comfortable. So yes, I'll pay attention to the fact that we're above this resistance area. I'll be looking for, obviously, on a lower time frame, we go down to observe some nature in the price action first, okay, before we even get down to the reversal structure story. Let's just do this. Where's that trend line? Take into account our extreme support. Maybe if we can just try and isolate something over here, maybe see if something looks like it makes sense. Okay, something does look like it makes a little bit of sense, as well as from this structure here. So let's just do ourselves a favor and delete this higher time frame structure that we have there. and rather just focus on the smaller structure that we have here, because it's going to give us the same setup anyway, no matter which, regardless of which structure we're looking at. Yeah, and then let's just come see what's inside here on a 4-hour. Let's just observe some point of interest inside of there where maybe we can see price action coming and tapping into. Okay, so we've tapped into this point of interest over there. So obviously, once you've tapped into this area there, I already start looking for those reversal structures. So I'll just take into account whatever trend I've got here. Obviously, observe that price action is still in an uptrend as long as we are above this resistance trend line. And then obviously, once we violate this resistance trend line to the downside, we'll also maybe be breaking back below our structure. So remember, we always say that once if we may be looking to oppose the direction of the current trend or whatever, and we have some resistance and we know higher time frame reasons why we're looking for bearish bias momentum, we look for our reversal structures above this resistance area. So our head and shoulders, our double tops, whatever. Once price action comes back below our level of structure, we start to look for our continuation structures. Yeah, we start to look for our continuation structures. Okay, I'm hoping there's something that I want to go through with you guys, but I don't want to waste time by going through this. So let me just do this on AJ, just so that I don't forget. So that if there's enough time, this will remind me what it is that I wanted to just share with you guys. When it comes to so this is basically just a way to refine where to focus on what structures, like when we have a structure, like for example this ascending structure, there's different kinds of setups that will present themselves differently inside of that structure. So okay, anyway, I don't want to get into it now. Let's just move on. And then if there's enough time after the session, then we'll jump back into it. But otherwise, guys, we're bearish bias from this resistance area. Obviously, resistance reversals up top, continuations back below. And then let's see if we can maybe even target the 90% rule of this smaller structure inside of here. Cool. Guys, let me just have a young drink there. Let me just see what you guys are saying there in the chats. Let's see what you guys are saying there in the chats. All good. I think let me just take a moment, guys, just to drink something there. Let me pause this jazz quickly, and then maybe just allow you guys to unmute before we go on to AJ. I don't know if someone wants to unmute themselves there. I wouldn't mind. Okay. I guess we'll continue. I don't see anyone unmuting there. Let's get into some AU. Let's just see what we've got. Okay, right, pause this. Cool. So on AU, yeah. Let me bring this to you guys' mind now. Let me bring this to you guys' mind. Remember in the beginning when we were looking at the DXY, and I told you guys that we were having a look at, or we were just being inquisitive into the fact and asking ourselves the question of why the hell is there dollar strength when there's not supposed to be any dollar strength right now? Like, a lot is going on with the dollar. Why is the dollar strengthening? And we concluded that, okay, it's because of the other pairs that dollar is relative to that are much weaker than the dollar itself. So obviously, dollar being a lot stronger, dollar moving to the upside because the other pairs are weaker. So looking at AU, we can see that AUD is on the left, right? We can see that dollar is on the right. So obviously, if dollar, we clearly saw dollar strength over here. DXY, we've been moving up, right? So that means that there's been some dollar strength on the DXY. Now, if the dollar, if we picture this, like I always tell you guys, like the way that the chart will move, depending on which currency is stronger or weaker, is if you just imagine this to be a scale. If you had a scale here, whatever's heavier on the left-hand side, obviously will tilt the scale like that. And then obviously whatever's heavier on the right-hand side will tilt the scale like this. So obviously if the pair on the right-hand side is stronger, meaning heavier, then obviously the scale should be moving down. But if what's on the left-hand side is heavier, then the scale should be moving up. So obviously the inverse also works, that if what's on the right-hand side is lighter than what's on the left, so which meaning if dollar is weaker than AUD, then this market should also still be moving up, because what's on the right-hand side is lighter than what's on the left-hand side. And obviously, if AUD was weaker than the dollar, then the market should be moving to the downside, because what's on the right-hand side is slightly heavier than the AUD, what's on the left-hand side. So you guys can see that if we look at AU and we look at the DXY, they've both been moving to the upside, which means that out of all of these base pairs, out of the pound, out of the euro, out of the whatever, all of these other pairs have been heavily, well, they're heavily being sold. Obviously, they're hella weak. They are hella weak. But the AUD has been strong over the course of this week, or at least stronger than the dollar in a sense. All the other pairs have been weaker than the dollar. AUD is the only pair. I remember I've been saying to you guys throughout the week, oh, AUD is the strongest pair today, oh, this, oh, that, all that nonsense. AUD has been the only pair that's been stronger than the dollar the whole week. And so hence, that's why we see AUD, USD also moving to the upside while the DXY is moving to the upside. But otherwise, cool. Okay, let's not highlight any POIs there. Not yet. So basically, let's just look at the structure and what we see here on the structure. And let's just see if there's any higher time frame, something that can spoil us here. Okay, no, I don't think there's anything that can spoil us higher time frame. Excuse me, higher time frame. Maybe let's just go up to a weekly and see if there's a point of interest there, because price is literally in the middle of nowhere. So just to be safe, if price is in the middle of nowhere, you don't want to be looking at all of those small areas of resistance and start marking all of those things, because you'll just be, you'll be setting yourself up in that case, setting yourself up for a lot of entries that aren't really in areas of value or anything like that. So if there's like a whole lot of resistance and they're not, you can see that all of these resistance areas are not so big. It's not like price action corrected. And there's only once where we had at least 2 candlesticks or whatever the case is. So if we don't find anything like that looks like it's convincing enough here, then we just go up to one time frame above and we see that in this move to the downside, was there a reaction from one time frame above? Because we always want the most relevant level of structure, structure that's obviously on a higher time frame, because higher time frames always give us more valid information. So let's just refine this to a daily, since we can, seeing that there's a bearish engulfing in there. So we know momentum came in right there. Yes, at this resistance, momentum came in, but from a daily, the sellers came in just after this daily candlestick over there. I'm taking into account what's going on here on AU. We've just recently broken above this resistance area up there. So you guys can see that we're literally slap bang in the center of some resistance. If you want to be a seller, some higher time frame resistance. Inside of here, all of these areas of resistance, now I don't think any one of them will really give us a nice trading opportunity with good probabilities. Just because we don't see reactions from a higher time frame as well. So looking at our important levels of structure, especially from a daily, is this resistance and this support down there. So maybe if you drop down onto a 4-hour, we'll observe maybe that market is kind of moving to the upside, breaking this resistance area. Wait, let me just see if maybe from a 4-hour, we might have areas that we can isolate inside of here. So that's one area where I see momentum. Do we see momentum here? It's tricky because that is a bearish engulfing. But after the momentum, there's like 2 candlesticks in there that just stalled. Tricky, very tricky. But anyway, let's see where we are. So we violated that resistance already, so we can't use this as a POI. So obviously the next POI then becomes this point of interest up there for any potential sell bias trading opportunities. But what I'm going to do for myself is I'm going to be using a little bit of nature's theory here on a 4-hour. So remember we had isolated this structure over here, a structure that looked something like this. I don't know if it was like this or how did it look, but this is the structure that I can observe now, just obviously accommodating for whatever new price action we have. But nonetheless, I think we had a structure, maybe our structure looked like that or something like this, but now obviously we need to accommodate for this new lower low. But looking at this structure, I see that this move here, the price action kind of looks fairly similar inside of here. So obviously it's not important for me to drop down onto a smaller time frame right now, but I do know maybe on Monday, if we drop down onto a smaller time frame like an H1 or whatever, we probably see maybe an ascending structure or whatever the case is in this region over here. Because remember on Monday when we're trading, so higher time frame for our directional bias, middle time frame for our points of interest, lower time frame for our entry criteria. Remember that on the weekend, like now, the analysis that we're doing, what all we need is we need a directional bias, which is what we need, a directional bias, and we need a point of interest. And the timeframes that we use is the daily for that directional bias and our 4-hour for those points of interest. Now, when we're trading during the week, the time frame that functions as our highest time frame now, where we find our directional bias, is now the 4-hour. The time frame that functions as our middle time frame, where we find our point of interest, is now the 1-hour. So obviously, when we drop down on Monday and we're looking at 1-hour structure, finding POIs that might align or give us trading opportunities off this resistance area there, we might find something. So obviously, we still maintain the structure, and then our lower time frame, that's our 15-minute, 5-minute, and 1 minute if you're that brave to go that low. But yeah, that's the structure that we generally follow. There's 3 time frames that we always find or derive our information from, and this week that's why we only go through the daily and the 4-hour, because there's no point in us dropping down below, because we'll end up imposing our own biases and start to see structure that doesn't even exist, because we already told ourselves that no, this thing is going to be a head and shoulders, or this thing is going to be an ascending structure. We rather just wait until Monday and then we observe if we see an ascending structure or whatever it is that we're expecting. So nonetheless, I don't think I'll be neutral anymore. Let's just be sell-biased on that. I just want to see if we marked out which directions we're going here. Okay, cool. So AUD CAD is the only AUD. At least this week we've got one AUD pair that we are bullish, that we're going bullish on. Yeah. So coming into Swiss yen, guys. Coming into Swiss yen, guys, if you guys think understanding the narrative of or looking at patterns and that stuff in corrector structures, if you guys think it doesn't work, I'm sure you guys know what I'm talking about. So from last week, we observed our point of interest up there, which obviously we are looking to sell from. We observed these lower structures down there, these equal highs up there, these equal highs up there. What did we say? We said that we wanted price action to come and violate, take out these equal highs. Well, first of all, obviously, we wanted price action to really honestly come up here first, because we would have had more of a reason to come down low and violate these ones. But obviously, price action is price. We can't predict how price is going to do whatever it decides to do. So we came down first to violate and take out whoever was already in whatever buy. Maybe they didn't want these buyers. Maybe buyers had take profits somewhere up here, whatever the case was. So market decided to flush out the buyers first. And then we came to flush out these sellers that have been in this market forecasting these sells from whenever, tapping into this point of interest. Guys, I mean, I just love this price action. I don't even care whether or not I enter, whether or not I've made money, whether or not I've lost money. I love the experiential knowledge. Like, if you really honestly have a process and have a system, and you follow that system to the T, and you learn from when that system does work and when that system doesn't work, any opportunity is an opportunity to learn. Like, it confirms your, I won't say your point of view, but it basically, let's just say it confirms your understanding of the way price action should develop based on the narrative that you've developed. Like someone there has a narrative of ascending structures break to the downside. That's kind of a narrative. It's a concept that someone uses, and they use this concept to make sense. When you see an ascending structure breaking to the downside, that confirms that using this piece of information to make sense of what happens in the market does kind of give you, or can function as, an edge for you, whatever the case is. Yeah, tough. Anyway, let's just get back into some Susian. So we've broken back into the structure. Conclusion basically being, we've broken back into the structure, and we're seeing the sellers now obviously showing themselves in this market. So what we want to do is we want to follow the higher time frame. Oh, why are we even on the 4 hour? Why are we even starting on the 4 hour, guys? Let's not skip our process. Let's do the things the right way. So higher time frame, daily, an ascending structure, right? Cool. Ascending structure, multi-touch ascending structure. You guys can see we're at the resistance of this ascending structure. Coming back now to just the daily time frame. Remember, I always tell you guys that if your charts are zoomed out to the point where you cannot see candlestick by candlestick, then you are not looking at the daily chart. You are looking at time frame higher than this actual, because yes, we're on the daily, but we can't see the individual candlesticks, meaning that the structure that we will observe looking at price action like this is the same structure that we'll observe on a time frame higher than this daily time frame. Once we zoom into the point where we can see the individual candlesticks, only at that point are we actually looking at daily structure. So looking at this structure over here, obviously we are observing some sort of resistance. We see prices coming down, giving us support. We broke above this resistance. We broke back below. We tested this resistance there. We gave us a nice new lower low. And obviously, we wanted to see price action reacting from this resistance there. Since we broke above, broke back below, we're expecting maybe some corrective price action to maybe try and complete this head and shoulder structure that might form on a daily, because we're higher time frame in an ascending structure that has the potential to break to the downside. So obviously just us adding whatever we're finding on these different timeframes, we're developing a narrative and a story, what we think market might be doing, where we think price action might be going based off these tools that we use to understand price action. And then obviously when we drop down onto a 4 hour, because we know that we're bearish bias because of this head and shoulders and ascending structure and whatever, we've already got a directional bias from our daily time frame. We come down to observe our points of interest. Now, coming down over here, we still have this ranging structure. We're still inside of this ranging structure. Basically, we've broken back inside of the range. We are still inside of the range, no matter how we try and cut this thing and make it seem nice. We are still inside of this range, and being inside of the range, we're going to get 50-50 unless we're looking for selling probabilities from the high of the range and buying probabilities from the low of the range. So that already indirectly tells us that if we want to find probabilities on whatever sell side momentum is coming in here, we need to be waiting to find price action basically correcting into previous areas of resistance, maybe this resistance over here that we've broken above, broken back below, and we might come back and retest for our momentum to the downside. So unless we find price action like that, what we will then obviously do is we have to wait for, like we've been observing, all of these corrective structures that are developing within the range, giving us an indication on which direction momentum might come in. We need to wait for a corrective structure to form inside of the range. If we don't get a retest or selling opportunity at up high, we need to wait for a corrective structure to form inside of this correction to give us an indication on which direction is the momentum going to be going, because we want to trade in the direction of the most recent momentum. So looking at the structure, I know we did kind of also isolate some ascending structure or something like this. So maybe you guys could also use this ascending structure for some little bit of reference, like maybe if you're looking for targets or whatever. I don't want to include it there in my drawings, but maybe just keep it in mind that structure does exist, and that the fact that that structure exists implies downside momentum already. So yeah, let's just wait to see if we do get a nice retest up high. Otherwise, Monday morning, once we get up, we're starting to look for continuation structures below. Same thing, reversals up high, continuations down below. Guys, my favorite song just started playing. I do apologize. Let me plug my favorite song. So if you guys are on YouTube, go and search Tom Misch and Yusuf Day's Tidal Wave. This has now become my favorite song. But otherwise, let's continue with our analysis. Let's continue. So we still sell bias on Susian, guys. We still sell bias on Susian. Let's go on to some New Zealand dollar CAD there. Okay, I just would like to see where we are within. Remember this old structure, guys. Remember this old structure. We were basically looking for price action to retest to retest for outside continuation. But I'm so sorry, guys. Yeah, I haven't been following New Zealand dollar CAD a lot. I haven't been paying attention to it a lot. Yeah, you guys have been hosting a lot of one-on-one sessions this week and stuff like that. So it's kind of been making me very much inconsistent with analysis. But that's how you guys can see. I try and set alerts and stuff like that, just so that I can still focus on doing one-on-one sessions with my mind not being in the markets or whatever, and just know that the alert will allow me to now shift focus and going to pay attention. But otherwise, yeah. So I guess structure still stands, or whatever the case is. We are currently inside of an impulsive phase. I don't want to have this structure on anymore. But instead, what I'll do is I'll observe this nice swap area. Previous resistance, price came back, retested it as support, whatever. All this nice good stuff. So an area obviously where price action can react from. What I will be looking for is for the upside continuation. So I still want to see the upside continuation. Obviously area that I can look for buying opportunities, which we'll refine on a 4-hour, is down there. So let's just go down to a 4-hour. We can see that we're in this impulsive phase already. So obviously we can't be looking for any trading opportunities. We wait for the next corrective structure to form. Yeah, my heart is a bit sore. My heart is a bit sore on this trade, because it literally gave us 2 trading opportunities. And the trading opportunity that we shouldn't have had any, or at least I shouldn't have had any excuse on taking, was after we got this change of structure, especially a 4-hour change of structure, and prices coming back into this deep low area here, guys. Come on now. After we just got a bullish flag. Yeah, but yeah, tis what it is. So looking at the price action here, obviously now we kind of just need to wait for some sort of maybe an inverse head and shoulders to play out, or whatever the case is, because yes, we want to buy, we want to trade in the direction of this most recent momentum, but we're at resistance, and either way we need to wait for a corrective structure to be able to jump into this trade. So it's gonna require some patience from us. Obviously the next area where we will be looking for upside continuation is if we break above this resistance area and maybe start to form continuations from there. So let's refine obviously the lowest area where we'll be looking for any bullish trading opportunities. The lowest area we'll be looking for any bullish trading opportunities is down here, which kind of does align with this previous area over here. Previous support, prices broke below, broke back above, and obviously if there's a retest that comes, that's an area where we would like to add a little bit of some size. Why did this thing do this? Just put it back the way it was. Okay, cool. Yeah, and then obviously there's this resistance up here, obviously breaking a retest of resistance. So we'll also just focus on that area there. So all that we need to see here from New Zealand dollar CAD to involve ourselves in a trading opportunity is just see that corrective structure coming into either one of our resistance areas. So we're either waiting for some structure to come into there, but we know that this is our point of interest. We're going to be looking for our buying opportunities from there. If prices do maybe violate structure and then decide to come and whack us and do something else, we know that we'll be creating some larger overall structure. And then obviously this is the area where we're looking for our last opportunity to buy. And that's probably where we'll try and add some size. So yeah, this is New Zealand dollar CAD. This is the first area where we're looking for some bullish momentum. The second area where we're looking for some bullish momentum. Let's just do this just so that I'm well aware of which areas, because I just want to know where, I just need to know where I want to look for my trading opportunity and which direction I want to go. And then that's about it. Let's go on to New Zealand dollar yen, guys. New Zealand dollar yen, New Zealand dollar yen. see what's happening there in the chat. Sikopana's laughing there. This was their favorite song came on. I see on the YouTube live session, you spoke of a strategy to grow an account that you will share if you remember. Can you please do so? Okay. Yeah. I think instead of us doing, there was something that I wanted us to mention here on AUD JPY. Remember, I put that 3 somewhere there to remind me what it was. But I guess, yeah, I guess you guys can choose. One or two. Let's just see. If we get more ones, then we'll go into this 3, whatever. If we get more 2s, then we'll go into this risk management strategy. Yeah, I'll just let you guys decide there in the chats. I'll let you guys decide there in the chats. Let's we were going on to New Zealand dollar yen. Daisy, cool. I see cats there saying tidal wave is the one. Thanks for the song plug. It's dope. It's like it's by the same musicians that I listen to, the same jazz musicians that I listen to. This is like one of their songs that sounds very R&B-ish. So it's kind of it's still jazz, but it's a different flavor of jazz. So it's nice. But otherwise, on New Zealand dollar JPY, guys, New Zealand dollar yen. So just looking at the most recent price action over here, just seeing where we are within the structure. We've broken above this resistance. Obviously, if you just draw this resistance from here, from these resistance areas there, down there, you guys can see that we've broken above this resistance. But if we go and look at how we've broken above that resistance, we'll obviously see something different about it. And where we are right now within the trend, within the structure, is that you guys can see that we're approaching some resistance. So important resistance, where we saw sellers coming in, being able to violate some support levels of structure, obviously giving us new lower lows. So it is an area where we could see some sellers. If the same sellers that saw the market here that decided to sell and were able to violate the support structure are looking at the market when price comes inside of here, then they're going to probably see the exact same value that they saw within this price region. Because remember, everyone's looking at what price is something right now relative to what it was in the past. So looking at things right now, we're coming towards this resistance area there. So obviously makes a lot more sense for me to be a seller than for me to be buying into resistance. So I will be a seller on New Zealand dollar JPY. Let's go on to the 4-hour and see what the structure looks like, if we can isolate any structures to accommodate the sell bias setup. If we just look at the most recent price action here on a 4-hour, just looking at the structure over here, we've got some important support down in this region there. Take into account our extreme support areas there and taking into account our extreme resistance areas up here. You guys can see that we've got some multi-touch structure. So first touch, second touch, third touch, you guys can see that we did violate our structure to the upside, but I can guarantee that if we went down onto a lower time frame, we would find some sort of an ascending structure. Just taking into account something like that. Don't know if we could add any resistance at this point in time, but nonetheless, it's not necessary for us to do so because we'll only be looking at the 1 hour on Monday. So looking at the 4-hour right now, guys, you guys can see that we have broken above this resistance area up here. So obviously, same stance as always, we look for our reversal structures above this resistance area. If we don't find that reversal structure, maybe an expanding, ascending structure, whatever the case is, we look for that momentum back below our structure and our continuation, obviously, below. So we'll obviously, if we do manage to find an entry up top there, then we'll be looking to target this small structure inside of here. But if we find an entry inside of this larger structure, then we'll be looking to target the overall structure. So that's New Zealand dollar JPY, very much sell bias for me on New Zealand dollar JPY over the course of next week, just because we're coming towards this resistance area and structure is bearish from a daily as much as we've broken above this resistance area. Maybe I didn't mention it, but I'm also taking this into account. The fact that, remember, we always pay attention to how does price break our level of structure and whatever the case is. If any one of you want to argue that this is an impulsive break of this resistance trend line, we can go at it. But nonetheless, I don't think this is very impulsive. Doesn't really show that buyers are convinced that buying the impulse, maybe the continuation and the impulse, because of how we broke this structure we didn't really break the structure impulsively. So it is another thing that I'm obviously taking into account, but not really that we need to speak about it, because when we drop down to the 4 hour, we'll still go down onto the, we'll still be looking at nature's theory and observing that price is correcting to the upside, because we can clearly see resistance areas, price is violating to the upside, breaking back below, indication of corrective nature of price action. And as well as over there as well. But anyway, we'll see how price action develops from here. I just want to undo those 2 lines at the bottom. Cool. Yeah, let's have a look at our US30. So we still sell bias on New Zealand dollar yen. Okay, cool. I'm glad that we're looking for a buy on New Zealand dollar CAD and a sell on New Zealand dollar yen, because it's going to allow us to hedge appropriately. We'll be able to trade them in two different directions. And if New Zealand dollar is the major mover of these pairs next week, we'll be able to catch a trade no matter which direction it is. Because if New Zealand dollar is weak and all of these New Zealand dollar based pairs decide to sell off, there's a nice pair that we can use to sell. If New Zealand dollar is strong next week and these New Zealand dollar based pairs decide to buy, then we've got a nice pair that we can look for bullish bias price action on. So either way, it's nice in the streets. So we're just gonna have a look at US30 there. Let me just check the chats there. I see 2. Okay, Busi saying 2, Tabo's saying 2 as well. Busi, I've been through this. I've been through this this risk management process with you. I remember us doing it in one of the one-on-one sessions that we had. So you'll be familiar with the session there. So I see Tabo's saying 2. Tabo's saying 2. So far it's 2-0, 2 for 2, 2 for 2, 2 for 2. Okay, cool. So looking at the structure here on US30, I'm gonna observe. I feel so uncomfortable doing this on US30, but I'm gonna observe trades in both directions, right? I'm going to be observing obviously a trade for a buying position and as well as a trade for a selling position. Now, looking at the structure, the overall structure, like higher time frame structure and all of that nice good stuff, we've just recently broken below a level of structure, important level of structure, and we're breaking back above. So whether you choose to highlight maybe this as that lower structure or whatever the case is, maybe because it's the lowest one and this one came quite close, so we'll say maybe it's equal lows or whatever the case is, doesn't really matter, but nonetheless, we just know it's not an exact level or it's not an exact line, but it's more so a zone. If we come down here, we'll obviously see a nice area where we find some momentum. Just there, we see a nice bullish engulfing candlestick pushing prices to the upside, and we have price action giving us a low just before this region over here. So it's always nice to see prices taking out previous buyers before coming into an area where you want to find some continuation. Always gives, like, I guess, a little bit better chances, because at least in this case, if you do find a buy from here, you'd know that at least I wasn't first, because check this guy here that was first. He could just got stopped out and price ended up coming and fulfilling or doing whatever, wherever he was targeting, price came back there. So he was kicking himself because he was like, I had the direction, price took me out and went in my direction. But anyway, yeah, we know it's never nice to be first in the market, because unless you got a very nice entry, like for example here, where market makers or volume came into the market, was able to violate structure. It's not often that you find those types of setups. So I've given up, guys. I've given up on timing the market, because you end up you focus on the wrong things when you're trying to time the market. And when is the perfect time for me to do this? When is the perfect candlestick? When is the perfect? These perfect things, they don't exist. All I do is that if my criteria presents itself, I enter. There's no setup that's going to look so textbook. There's no setup that's going to, as long as it fits the criteria, whether it looks nice or it doesn't look nice, I'm going to enter. How I manage things differently maybe is I'll manage, or maybe just practice risk management a bit differently on the setups, depending on what the risk of taking that setup is going to be. So otherwise, we've got some resistance areas up here on a 4 hour. We'll obviously refine it to an hour. So remember our process, guys. When I'm looking at indices, because I want to be executing on lower time frames, like a 5 minute, like whatever the case is, for me, what I'm looking at, or for me to find the direction. So basically, weekend, I use the 4 hour for my directional bias. I use the 1 hour for my points of interest, and then obviously during the week, during the trading week, I then use the 1 hour for my directional bias, which is usually the same as as the weekend. And then obviously I use my M15 for my important levels of structure, my points of interest, and then I use the 5 minute and the 1 minute for my entry criteria. So I've scaled. Yes, I'm still using a high time frame and a middle time frame on the weekend, and I'm using a high time frame and a middle time frame and a lower time frame during the week. But obviously I've just scaled the things down because I want to take trades with smaller stop losses. So I've just scaled my process a lot lower on indices. So that's why you're not seeing us going up to the daily, but we're starting off on the 4 hour. So on the 4 hour, you guys can see that we're currently stuck within a range within this market that's moving sideways because we created sort of equal highs. Yes, we did create a higher high, but obviously prices didn't sustain that new high. So I'm going to consider that it's been kind of like equal highs. And then also you guys can see that we've got some almost sort of equal lows where we've got a nice rejection, obviously another rejection there. So almost equal lows over there as well. So I'm going to consider that price is kind of moving sideways. And what we can do is look for buying probabilities from the low of the range, selling probabilities from the high of the range. Now, dropping down to the 1 hour, we'll obviously be able to observe a little bit more about the nature of the price action. So let's just go down to that H1. Ooh, why isn't structure clear? Why isn't structure clear? But anyway, there's no clear structure there. I was hoping that we would have been able to isolate some sort of a descending structure, whatever the case is. We can maybe in terms of support, but in terms of adding a resistance trend line inside of here, guys, we'll honestly just be forcing it. If we chose to isolate any one of these resistance areas here, we'd honestly just be forcing it because price action is just too choppy at resistance. And we remember we want to take into account some extreme levels of structure. And so we can't really see those objective stream levels of structure inside of here. So what we'll do is we'll just exercise patience and rather stay out of drawing that resistance trend line. But in terms of support, yes, maybe if I had a nice resistance trend line, then the way I would have isolated my structure is just taking into account this support, that support, and then consider that price action can come down and give me a nice third touch of price action. Maybe we might even see this develop, like price maybe might come up and then give us a nice resistance where we'll be able to properly draw a resistance trend line. And then we might come down, maybe even give a fake out, but we know as long as we've got the support, this is our support trend line there, we look for reversal structures below this. Once prices break back above, we look for our continuation structures above or some sort of a structure that looks like this. But nonetheless, you've got a point of interest there. Let's refine it. Nice. Let's refine it a little bit more. So we've got an exact area where we are looking to add size. If prices violate this area, then we're looking for something totally different. So we always like you always hear Funny like you're saying that, guys, billionaires don't compromise. So like, don't compromise. You decide what you want and you let the market give you that entry criteria or come to your point of interest. If market is not giving you what you're expecting or the nature or something of that nature, then obviously market is doing something else. And so you need to adjust your understanding of what market is doing to accommodate what market is actually doing. Sure. Hey, the song that's playing now is touching me. But anyway, so on US30, we've got this sort of structure. Let's also just delete this support trend line there, just so that we're not focusing on things and we're going to kind of just maybe look and see how price action develops. But otherwise, what I do have are these 2 points of interest, guys. So I would more so like to be a buyer first rather than a seller. But obviously, if price action is coming down to, is planning on selling off, you guys can see that, okay, let's refine this point of interest as well. Let's also refine this point of interest. We've got this resistance up here, where we'll obviously be able to find any sell bias trading opportunities off. What am I doing now? And just looking at this structure here, if you were looking for a sell bias trading opportunity, you'd obviously be able to isolate a structure that can give you that sell bias trading opportunity. So obviously, even if you're looking for a sell, you're still waiting for price action to come up. Obviously nature of price action to confirm your sell bias trading opportunity. You're waiting for that third touch. We have a nice point of interest up here, which will obviously be looking for reversals. We have a resistance up there. Same thing, reversal structures above our resistance. If prices don't give us a reversal structure, we wait for price action to break back below our resistance. Then obviously thereafter we look for our continuations for price action to give us that momentum to the downside. So guys, we've got opportunities to trade in both directions on US30. That's what I was telling you guys. I feel very uncomfortable with what's going on right now. US30 is giving both buyers and sellers a reason to jump into the market. So what I'll do is I'll trade the probabilities. I'll wait for price action to give me those setups, obviously, that we just discussed now. I'm not going to add any, let's just do this and delete these structures. I'm not going to isolate any structures right now because I want to look at this market like a range. I want to see selling probabilities from the high and buying probabilities from the low, rather than me focusing on a third touch, ascending structure, whatever. Because yes, I want to take both trades in both directions. So I'll rather just focus on looking for sales from the high, looking for those buying probabilities from the low. I think I'm pretty much done. So we'll keep this as neutral. We'll keep this as orange. And then obviously we'll just make sure that we know exactly what we're looking for. We're either looking for prices to violate these support structures, give us a reversal structure down low, or we're waiting for price action to violate these resistance areas up here. So we'll show a reaction from there. We violate, or a reversal structure up high for the move to the downside. Doesn't really matter whether we get the buy first or the sell first. We know exactly where our probabilities will align. Where's our point of interest? Once price comes into that point of interest, we just wait for entry criteria that gives us a structure that allows us, obviously, to buy. So let's I think go into, let's just see what's going on here in the chats. I thought it's a different one. No, it's the same thing. It's the same thing. It's the same one. It's the same one. Yeah, I like to share my processes. I like to share my processes. There's no secrets. Maybe I feel like I should even charge you guys for this form of risk management, because it's something from the medulla. It's something from the medulla, not something that someone else taught. But anyway, so let's just take an example, right? So first of all, I'm gonna say that this method of managing risk, first of all, functions. Okay, let's just draw something like this first of all. So first of all, this kind of a risk management process, right, is best functional, or will best help you if you are taking trades that have very refined stop loss areas. So for example, if your stop loss is still going to be like maybe 20 to 30 pips or something like that, then this type of a risk management process is not going to be so helpful. But if you are able to refine your analysis down to the smaller timeframes, and you're maybe able to take entries with a more refined stop loss, like maybe those three in between 3 and maybe 10 pip stop losses or something along those ranges, then this method is going to be helpful. So I'll tell you guys, maybe the way that I came up with this method of risk management will kind of give you guys a good visualization of this method. So let's look at a prop firm, right? A prop firm is giving me a maximum of 5% drawdown. They're telling me that you can't go below -5%, and your profit target is plus 10%. So in other words, they're giving me $500 to risk, and I must double that $500 and make $1,000. Cool. Already they're asking me to practice bad risk management. So what I looked at this is now also, let's take into account some risk to reward ratio there. Let's just make this 1:6, just so that we have a nice round number to do proper maths. Come on, I had it. 1:6. There we go. Cool. So just so that we can do nice simple maths. So what we're gonna do is, I'm gonna look at this position, right? Let's just say that I'm splitting my risk. I'm gonna end up splitting. Maybe I've got an ascending structure, because I want us to visualize this as much as possible. So my ascending structure obviously is gonna give me maybe a risk entry up here. And then maybe my ascending structure might also give me a reduced risk entry somewhere inside of here, or whatever the case is. I might get a reduced risk entry. Okay, cool. So anyway, now that I've kind of split up, I already know that for this setup, I'm going to be looking for maybe 1 or 2 risk entries. I'm also going to be looking for maybe 1 or 2 reduced risk entries. Now I already know, okay, maybe let's just say this trade is giving me a 1:6. I've got a 1:6 risk to reward ratio on this trade. Now I'm going to ask myself, cool, how much do I want to make? Remember, my drawdown is minus 5%. So I can't be risking 1% per position, because then it's just going to mean that I'm only going to take 5 positions and I'm going to be stopped out. And this is going to, especially if my risk to reward ratio is a lot bigger than 1:6 or whatever the case is, this functions even better. So what I'm going to do for myself, I'm going to ask myself, how much do I want to make? If I had to take this trade and I had to hit TP, how much do I actually want to make on this position? Now, what I'll do is, after I've told myself, now let's just say what I was doing, this is how I'll try and pass these prop firm challenges and whatever the case is, using this risk management process. So I would then maybe target, let's just say I'm targeting 2%. My target per trade is I want to make 2% of this account. Because remember my drawdown is minus 5. So I want to make 2%, which means that if I get 5 TPs, I'm passing this prop firm challenge or whatever the case is. Now, what I'm going to do is, I already know that I can't risk 1% per trade or whatever the case is. So I'll look at my 2%. How much is my 2%? My 2% is $200, right? Because obviously my maximum drawdown is $500. All I'll do is, I'll say 200 divided by my risk to reward ratio. Obviously, if my risk to reward ratio is bigger, it's a lot better. So let me just use a bigger risk reward ratio, just so that you can see the functionality, the real functionality of this process. So if you, obviously your stop size is small, that indirectly makes your risk to reward ratio big. So let's just say maybe I've got a 1:10 or whatever. I also just want to use another even number. Let's just use 1:8 as an even number. Let's just say it, because it's a little bit more realistic. Let's just say I've got a 1:8 position. All I'll do is, I'll say the 200 that I'm planning to risk divided by 8. Guys, I can't do this maths in my head. So we'll go there and we'll use our calculator. Just give me a second. 200 divided by 8. Let me see if you guys can see my screen. It's 25. Cool. 200 divided by 8 is 25. So I know already I'm going to be risking $25 per position. So with me risking $25 per position, it will take me 8 positions. It'll take me to lose 8 times in a row to be down minus 2%. But if I win one of these 8 positions, obviously I know what the win rate of my strategy is. If obviously my process has a win rate of, I don't know, let's just say 50%. Out of these 8 trades, I'm at least expecting to win 2. I'm just being realistic here. I'm at least expecting to win 2 of these 8 trades. So already I know that if I lose all 8 of these trades, I'll be down minus 200. But if I get one of these 8 trades, I'm plus 200. And that's how I would manage my risk. Obviously, in this case, it doesn't allow me. I can't do fancy things like I can't be partialing out along the way, because that decreases my overall risk to reward ratio. Unless maybe I'm okay with getting less than my 2%. Maybe if I'm like 1% up, then I can partial out. Who wouldn't want 1% when you are only risking 0.5% or something like that? Yeah. So yeah, this is kind of, you're actually risking 0.25. You're not even risking 0.5. This is how much you're risking: 0.25% of your account, which means that out of every 4 trades that you lose, you've only lost 1% of your account. So this is the kind of risk management that I used to use. So basically, it's me looking at how much I want. So it's basically me taking my target size, how much I want to target, and then I'm using my risk to reward ratio to make sure that I get the amount that I want to target. And then with this risk to reward ratio, the better my risk to reward ratio is, then the smaller the risk that I'm actually going to be taking to make the exact same 2% per position. So I try and get trades that have bigger risk to reward ratios, because it will allow me to take a lot more positions. And if I get one of those a lot more positions, then I'm fine. Like maybe I can even tell myself that, okay, cool, my risk is $25 or whatever the case is, or I'm supposed to be risking $25. What if I look for trades on a 1 minute chart, and instead of risking $25 at that point on a 1 minute chart, I'm risking $1 per trade. And my risk to reward ratio, because I'm on a 1 minute chart, is 1 is to, I don't know, 1 is to 50 or whatever the case is. I'm just being ridiculous right now, but I'm just trying to drive the point. I'm on a 1 minute chart. I'm taking trades using $1 per trade. My risk to reward ratio is 1 is to 50, whatever the case is. Now, if I get one of these 50 positions, I will make my 2%, and it will take me to lose 50 trades in a row to be down that same 2%. So I'm using my risk to reward ratio to let me take well more managed risks. But if I make a good return on that risk, then I'm making so much more than I would have made on my normal average risks. So this the way the main purpose why I kind of came up with this method is because already the way that a prop firm is designed is it's designed to make you take poor risk management decisions. And so obviously, how do you then take good risk management while still be able while still trying to make your target of 10% in the space of I don't know, for those of you, if you're doing evaluations, you guys have a 10%, or maybe if you're with my Forex funds, you guys got an 8% target that you need to make within the space of 1 month. So how do you make 8% in the space of 1 month? By using good risk management. This was then the process that I came up with of using my risk to reward ratio, taking trades on much smaller time frames, and yeah, all of that nice, good, juicy stuff. So there you have it, guys. There you have it, guys. There you have it, guys. A nice risk management process for you guys, especially for you guys that are maybe trying to trade with prop firms and those types of things. I guess so that you can manage risk a lot better, you can use this kind of a management process. But obviously, guys, don't include resistance into your trading process. If you've never ever executed trades on a smaller time frame, if you've never executed trades with small stop loss sizes, don't now think that this is going to just magically solve your problems, and you haven't got the experiential knowledge to back up that process that you're currently doing. Maybe you've never even back tested it. So obviously, do the work before you actually go in and see how does this fare with your own trading process. Don't try and use this process whereas you're indirectly introducing resistance into your trading process. Now it's like it's harder for you to trade and for you to make money. Like even what you were doing before, you weren't losing as much, or your results were even better. So yeah, don't use this process and introduce resistance into your system. But if this process reduces the resistance, then use this process. Yeah, I think I'm pretty much done. I'm pretty much done with the analysis, guys. My mic, I mean, the camera has been absolutely dark. I don't know for what reason, but yeah, guys, I'm done with the analysis there. I think if no one has any input there before we call it a session, maybe to just holler, to just say hi, to just ask how's it. Yeah, we'll call it a session, guys. We'll call it a session. Let me pause this if anyone. This used to be my favorite song, guys. It's called Love is the Message by Yusuf Days and Alpha Mist. Such a beautiful song. Oh, the hype on that song. But otherwise, guys, let me stop sharing my screen. We'll see if maybe anyone wants to unmute their mics, their cameras, or whatever, maybe before we call it a session. Otherwise, if there's no one, we'll call it a session. And then we'll say, let there be peace in the streets. There, we'll say, let there be peace in the streets. Busisi was saying thank you. So I guess Busisi was not gonna unmute herself to say thank you. But it's fine. Thanks, guys. No stress. I see Umpele saying there, thanks for the powerful information. Appreciate it. Thanks so much there. I see Pontus also giving a young emoji there. Appreciate it, guys. No stress. I will see you guys in the groups. Have a great weekend, guys. Have a great weekend. Enjoy your guys' self. Yeah, guys. Thanks, guys. We'll see you guys later. Cheers. Have a young weekend, a great young weekend. Check you guys, check you guys. Guys, we're done with the analysis. So I will be stopping the stream now. I don't know if you guys maybe had any questions. I don't see any questions over here. Featuring light too. I'm reading what you guys are saying. Let the countdown begin in the
and then you
building.
go to
Euro JPY. I don't trade any Euro pairs, guys. I don't trade any Euro pairs. That's I saying all
right.
good. Welcome there, Natsai.
Then
Welcome,
after
welcome,
account
welcome,
opening, it
Natsai.
will show
I see
you
cats
like
there.
this.
Always enjoy your
So you
content,
can
bro. Big
currently
ups.
show
Thanks,
me
there, cats.
7 A's left. That's what I
How do
do
we make
for
an
this is my
entry?
personal one. Then you look at
Make an
number
entry
and
on
things
the
like
break of
that.
the
And it says
resistance
next
trend line.
payment is
Explain
two hundred
more
and
on the
fifteen
head and
dollars
shoulders
but
entry.
I'm currently
So head and
running
shoulders entry, I'm basically
the
either looking
overstrike, so
for
it's
a
a
right
margin
shoulder, a
call
trade at the right shoulder,
$81. And then
or a
on
trade at the
329,
neckline.
I was
There's
for
nothing
38.
too
I
complicated.
will
Like the
come here,
same
cancel
the
that
same way
price. So you just
we've been
go
taught to do it
to
in
the
theory. That's kind of what
billing,
I'm
and
looking
then you
for
go
as
to
well.
billing, and then from billing,
Yeah,
it will give you
that's
the
kind of what I'm
different
looking for.
packages that they have, and then you just choose any that you want, and then
Let's
you go to
see. I
free
see
trial, and then after
Pra
free
Martin.
trial, you put
Very
your
informative
tracking code,
session,
and
my
then
guy.
it will
Thanks a lot
normally
there, man. I
take
see New Zealand
$1,
dollar
and then after
JPY
$21 you have
from
access to all
Kutlwano.
services,
Kutlwano
and then
Donald.
after
What's
that
good? From 2.0,
on
from
the
2.0, from 2.0.
21 you can
Yeah,
cancel the
we've done
opening, you
some
can
analysis on
cancel,
New Zealand
you
dollar
can
JPY. I know
continue
we're sell
paying
biased
from the
on that
beginning.
pair.
If not,
We're looking
you
to
can
catch
take
some sell side
advantage of the
momentum.
USD
Hopefully,
sleeper. That's what you can do
price action
for
gives us that
the
nice sell side
sleeper.
momentum.
So
I see Van
another
Rent
thing, you
there. I
go
don't know
back
what that
testing.
means.
Really,
And I
back
see
testing is like
Cats is saying
you have to
tidal
be
wave.
specific as to
That's
what you
the
want
song.
to
Thanks for
backtest,
the plug.
right?
Otherwise,
You
guys,
can backtest everything, but
I don't see
every
any new
single
questions
backtester,
there in the
what we
chat.
do
So I
is
guess I'll be calling it a
backtest
session.
one pattern
Um,
that you'd like
yeah,
to
I'll see you guys
know
wherever
and
we
trade,
meet up. I'll
and
see you
so that
guys.
it
Cheers,
becomes
guys. Have a
easier
great
for
weekend,
you. So in
guys.
this case, we say you should backtest